All right, buckle up, everyone. This week has been an absolute roller coaster for the stock market. We're seeing some serious turbulence. And if you're like me, you're probably wondering what the heck is going on and, more importantly, how to protect your hard-earned cash. The headlines are screaming, market meltdown. And frankly, it's hard to ignore the fear. But before you panic sell everything, let's take a deep breath and break down exactly what happened, why it happened, and what you can do about it. We're not just going to throw numbers at you. We're going to give you actionable insights you can use right now. Did you know that despite the overall downturn, some companies actually thrived? We'll uncover those hidden gems too. Stay with me. This is crucial information for every investor. Let's start with the elephant in the room, Nvidia. The darling of the AI boom has taken a serious hit. We're talking a significant dive, folks. Now, this isn't just a minor dip. It's a concerning trend that has many investors scratching their heads. Why is this happening? Well, a couple of factors are at play. First, analysts are starting to question whether the Nvidia FOMO rally, that fear of missing out, was justified. Are the expectations simply too high? Second, potential new China AI trade restrictions from the Trump administration are casting a shadow over Nvidia's future growth prospects. This is a big deal because China is a massive market for Nvidia's AI chips. Remember, the stock market is forward-looking, and these uncertainties are weighing heavily on investor sentiment. It's not just about the present. It's about what the future holds. The big question is this a buying opportunity, or is there more pain to come? This is where things get interesting. Some analysts are saying that Nvidia is oversold and that this is a chance to buy low. Others are warning that the stock could fall further. I know it's confusing. We'll get to a potential solution later. But let's not forget that Nvidia is still a dominant player in the AI space. Don't count them out just yet. This is a test of their resilience, and honestly, it's making me sweat a bit. Are you feeling the pressure too? Next up, Tesla. Oh, Tesla. Where do we even begin? The EV giant is facing a multitude of challenges, and the stock price reflects that. We've seen a huge sell-off, and the stock is fighting for last-ditch support after essentially round-tripping its post-election gains. That's a fancy way of saying it's back to where it started. What's driving this decline? Well, competition in the EV market is heating up. Tesla is no longer the only game in town. Legacy automakers and new entrants are all vying for a piece of the pie. Demand is softening, and Tesla is struggling to maintain its market share. Production issues and supply chain disruptions are also contributing to the problem. And let's not forget Elon Musk's controversial leadership style, which, let's be honest, sometimes feels like a reality TV show. It whipsaws the stock. It's a potent cocktail of negative factors. The company's Q4 earnings miss just added fuel to the fire. Investors are losing patience, and they're demanding results. I'm not going to lie, things look pretty bleak for Tesla right now. But remember, Tesla has overcome challenges before. Can they pull off another miracle? That's the million-dollar question. It's a high-stakes game, and the clock is ticking. Now, for a bit of good news. Amidst all the doom and gloom, there's one company that's bucking the trend, Nutanix. This cloud computing company is actually jumping. Yes, you heard that right. While everyone else is sinking, Nutanix is swimming. What's their secret? Well, Nutanix is benefiting from the increasing demand for hybrid cloud solutions. Companies are realizing that they need a mix of on-premises and cloud infrastructure, and Nutanix is perfectly positioned to capitalize on this trend. They are also executing well on their business strategy, delivering solid earnings and exceeding expectations. It's a refreshing change of pace, and it shows that there are still opportunities to be found in this market. Nutanix's success is a testament to the importance of diversification. Don't put all your eggs in one basket, folks. It's a valuable lesson, especially in times of uncertainty. We'll get into how you can diversify your portfolio later. But for now, let's give Nutanix a round of applause. They're proving that even in a tough market, there's always a way to shine. It's a beacon of hope in a sea of red. Awesome. I'm really feeling better now. The market's volatility wasn't just driven by individual company performance. A heated meeting at the White House also played its role. While the exact details of the meeting remained somewhat opaque, the market reacted negatively, suggesting concerns about potential policy changes or economic uncertainty. This highlights the market's sensitivity to geopolitical events and government actions. The meeting likely touched on issues like inflation, interest rates, and trade policy, all of which can have a significant impact on corporate earnings and investor sentiment. The market hates uncertainty, and these types of meetings often create more questions than answers. It's like a black box. You don't know what's going to come out. This added layer of complexity makes it even more challenging to navigate the current market environment. Stay informed about these events, but don't overreact to every headline. It's a balancing act, and it requires a cool head and a long-term perspective. Remember, the market is a marathon, not a sprint. Deep breaths. Investors Business Daily, or IBD, is always a great resource for finding leading growth stocks. Their IBD 50 list is a curated selection of companies with strong earnings and sales growth, and it's a good starting point for identifying potential investment opportunities. However, it's important to remember that even the best growth stocks can experience volatility, especially in a turbulent market. Palantir, for example, recently exited the IBD 50 list, highlighting the challenges of maintaining momentum in a rapidly changing environment. Still, the IBD 50 can provide valuable insights and help you discover companies that are poised for long-term success. It's like having a treasure map, but you still need to do your own digging to find the gold. Use the IBD 50 as a tool, but don't rely on it blindly. Do your own research, analyze the company's fundamentals, and assess its long-term prospects. This is your money, so take ownership of your investment decisions. The Federal Reserve's key inflation gauge, the PCE price index, is always closely watched by investors. This data provides insights into the pace of inflation and helps the Fed determine its monetary policy. If inflation is cooling, the Fed may be more likely to pause or even cut interest rates, which can be a positive for the stock market. However, if inflation remains stubbornly high, the Fed may need to continue raising rates, which can put downward pressure on stock prices. The relationship between inflation, interest rates, and the stock market is complex, but it's essential to understand the basic dynamics. Pay attention to the economic data and the Fed's pronouncements, but don't get caught up in the short-term noise. Focus on the long-term trends and the underlying fundamentals of the economy. This is what separates successful investors from the rest. It's about seeing the forest for the trees. The Magnificent Seven stocks, Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, and Meta, have been driving the market's gains for much of the past year. However, the recent struggles of Nvidia and Tesla raise questions about whether these stocks can continue to lead the market higher. When market leadership shifts, it can create uncertainty and volatility. Investors may start to question the overall health of the market and become more risk-averse. It's important to monitor the performance of the Magnificent Seven and see if other stocks are stepping up to take their place. A healthy market needs broad participation, not just a handful of companies carrying the load. Are we seeing a changing of the guard? That's the big question. It's a new era. Keep a close eye on the market dynamics and adjust your portfolio accordingly. The market is constantly evolving, and you need to be adaptable to succeed. All right, so what can you do to protect your portfolio in this volatile market? Here are a few strategies to consider. First, diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographic regions. This can help to reduce your overall risk. Second, consider rebalancing your portfolio. If certain investments have become overweight, trim them back and reallocate the proceeds to other areas. This can help to maintain your desired asset allocation. Third, don't be afraid to hold some cash. Cash can provide a cushion during market downturns and allow you to take advantage of buying opportunities. Fourth, stay informed and don't panic. The market will always have its ups and downs, but over the long term, it tends to trend higher. Don't make rash decisions based on short-term emotions. Finally, consider consulting with a financial advisor. A professional can help you develop a personalized investment plan that aligns with your goals and risk tolerance. Remember, investing is a marathon, not a sprint. Stay focused, stay disciplined, and don't let the market's volatility derail your long-term plans. You've got this. The potential for new China AI trade restrictions is a major concern for the tech sector, particularly for companies like Nvidia. These restrictions could limit Nvidia's ability to sell its AI chips to Chinese customers, which would significantly impact its revenue and earnings growth. The impact would not be limited to just Nvidia. Other AI chip makers and companies that rely on AI technology could also be affected. The restrictions would disrupt global supply chains and create uncertainty in the market. It's a classic example of how geopolitical events can have a direct impact on the stock market. While the details of the potential restrictions are still unclear, it's important to monitor the situation closely and assess the potential implications for your portfolio. This is a complex issue with far-reaching consequences. Stay informed and be prepared to adjust your investment strategy as needed. The world is interconnected, and the stock market reflects that. It's a challenge, I know. The SEC's recent decision to classify meme coins as collectibles rather than securities has sent shockwaves through the crypto market. This ruling means that meme coins are not subject to the same regulations as traditional securities, which could lead to increased speculation and volatility. Bitcoin prices have also tumbled after Trump provided a tariff update, highlighting the crypto market's sensitivity to macroeconomic factors. The crypto market is still relatively new and unregulated, and it's prone to wild swings in price. Investing in crypto is highly speculative, and you should only invest what you can afford to lose. Be wary of the hype and do your own research before investing in any crypto asset. The crypto market is a wild west. It's a high-risk, high-reward environment. Proceed with caution and don't get caught up in the frenzy. It's important to protect yourself and your investments. So, what does the future hold for the stock market? Well, that's the million-dollar question, isn't it? No one can predict the future with certainty, but we can make some educated guesses based on the current trends and economic data. I believe that the market will continue to be volatile in the near term as investors grapple with uncertainty about inflation, interest rates, and geopolitical events. However, over the long term, I remain optimistic about the market's prospects. The global economy is still growing, and technological innovation is driving productivity and creating new opportunities. The key is to stay patient, stay diversified, and stay informed. Don't let the short-term noise distract you from the long-term picture. The market is a complex and dynamic system, but it's also a powerful engine for wealth creation. Stay the course, and you'll be rewarded in the end. I truly believe that. And remember to subscribe to the channel and leave your questions and comments below. We're here to help you navigate the market and achieve your financial goals. Thanks for watching.